PCE, the Fed's preferred measure of inflation, it's literally called the Fed deflator, came out last Friday. Now, the market was closed, so the market didn't get a chance to react to it. The bond market did not get a chance to react to it. And we saw quite the reaction today on top of manufacturing data that was positive and GDP data last week that was positive. So let's talk about all of it and how it matters for us in our businesses and how it gives us a positive outlook going forward for the foreseeable months, Q1, Q2, and of course, those 3 Fed rate cuts, they're still on the table.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. Back at my desk after seems like a freaking month on the road. God, March is crazy. But here for a couple weeks. Happy April Fools, Easter, Good Friday, all the good stuff. I did not get my Thursday night video out to you. I was at Industry Conference 24. If you know, you know. And it involved a little end-of-year skiing in Park City. So I am recharged and ready. PCE came out last week. It's jobs week this week. So tremendous macro data that has to do with the Fed's mission. And we talk about it all the time because they say they're data dependent. So we watch the data because lenders, especially as you grow in size and want to scale, we have to model out and project how we want to run and operate our business. Do we want to invest in certain initiatives? Do we want to buy new tech? Do we want to support this channel in a certain way? And yeah, we do modeling for our staffing levels, and it's very important. You know, I'm sure everyone's pretty busy right now in the month of March, which is a great thing. It's a fantastic way to end Q1. We had, just not to get into too much PRMG stuff, but just to use this as an example, pushing $150 million in fundings last month. And typically in a normal market, most IMBs are not profitable or break even in January and February, and then March really bails them out for the whole quarter. And that's for lenders of size and of scale. And of course, that sets the table for April through July to be fantastic. So when you're scaling out a business and you literally have, we have strategic ops VPs, business analysts, we model out our staff and we look at our reports. And so this data that we talk about, where the economy is going, what's going on with mortgage interest rates, it's important. It's important for your planning, especially when you want to grow at scale, right? You could just say, oh, we're busy. I guess I need to hire another underwriter. Okay, great. That's a way to run a business, right? If you're a lender, but there are better ways. And so today was our senior management meeting. We have once a month, first Monday of the month, and we weren't fooling around talking about what's going on here in this business. And it's nice to see, at least for us, we are growing. So our headcount grew to over 1,500 employees, and we netted employees headcount up month over month. So that's good. It's good to know, to be able to say to your company that we're in hiring mode right now. And it's also good to rehome some of our people, unfortunately, that were lost in the brutal last 2 years and bring some of our employees back. So I know a lot of us are having great success stories like that. And it wasn't easy. The last year and a half was very tough on everybody. So no one's immune to it, right? Macro factors like inflation and interest rates and jobs and everything that's going on and what the Fed does. And that's why we talk about it a lot. And so what are we going to talk about today? So PCE, the Fed's preferred measure of inflation. It's literally called the Fed deflator. Came out last Friday. Now, the market was closed, so the market didn't get a chance to react to it. The bond market did not get a chance to react to it. And we saw quite the reaction today on top of manufacturing data that was positive and GDP data last week that was positive. So let's talk about all of it and how it matters for us in our businesses and how it gives us a positive outlook going forward for the foreseeable months, Q1, Q2, and of course, those 3 Fed rate cuts, they're still on the table. That could be a nice little second half of the year boost. So we'll talk about all that, how it all matters. Personal consumption expenditure. What are people spending their money on? That's the Fed's preferred gauge of inflation. This economy is 70% based on what consumers spend their money on. So this measure, which is 17.5% weighted on housing. Now, that's interesting because when you look at CPI, Consumer Price Index, that has a much higher weighting on housing. Let's call it around 40%. This doesn't have as much. Now, that number, that 0.26%, okay? Everyone wants to round up to 0.3, and you can do that, and that will put us at a 30.6% run rate on inflation, if that's what it was, 0.3 times 12, but at 0.26 times 12, that's only 3.12%. It's a big difference. It's about half a point different. So when you see people rounding up, it's kind of factually inaccurate, but that's okay. We're here to parse through all the facts. So 0.26%. Of that 0.26% increase in the PCE last Friday, 0.08 of that was housing. But year over year, that number is down 0.26%. So it's down, 0.28%. So the year over year reading that went from the March reading and the February reading, that number is down 0.28%. So we are still coming down. 2.5%, 2.8%, depending on what you look at. And by the way, the GDP numbers that came out, which does have an inflation, a PCE component in it, the economy's growing. Okay, so we're at 4.9% GDP growth in Q3. In Q4, the final number came out on Friday, or last week. Now it was supposed to be 3.2%. It was actually revised up to 3.4%. So down from 4.9%. Higher than expected. The economy's growing. That's a good thing. And in that GDP report is a PCE quarterly reading, 2%. Thought it was going to be PCE, personal consumption expenditure, in Q4 of 2.1. Actually came in lower at 2%. So in the fourth quarter, the PCE, the Fed's number, was 2%, the target. Now, of course, there's lag effects over 12 months. We've got some big comps coming up here. But inflation is coming down. Now, is it sticky? Is it going to stay stuck here? I think the decision that the Fed is going to have to make is, are they going to have to say, you know what, can't build more houses. Housing is this small, and the demand is still higher than the supply. And so the prices of homes are going to go up. They just are. And the Fed can't do anything about that. So the longer they keep rates high for longer, they're sufficiently restrictive, and they are hurting the poor. They can't get into houses if rates aren't lower. They can't get the car loan, get the credit card debt down. And so we've got this massive wealth gap that is widening. And you know what helps the lower socio-demographic parts of our economy is lower interest rates. So real rates are sufficiently restrictive. Chair Powell came out and said, hey, you know what? We're going to keep it right here for now. Basically, we're somewhat hawkish on the comments. Like, we're not in a rush to cut yet. And so now all the bets for cuts have moved to June. So it's like a 63% chance that a first rate cut will be in June, not May. And then there's like an 80% chance, on the CME tool that that the first cut's in July. So we'll see. Now, this GDP is a massive factor. We have economic growth, slowing, but still good. We had manufacturing data came out today that for the first time in 18 months, the ISM Manufacturing Index, 50 is even par, below 50 is contractionary territory, and above 50 is expansion. It was 50.2. First time over 50 since September of 2022. Now, if manufacturing is expanding, that will actually raise the guidance of our current quarter, Q1, the GDP numbers. So that would raise that growth target. But jobs are center stage the rest of the week. So if you noticed, the 10-year Treasury, which directly affects our interest rates every single day, popped up this morning on all that data. PCE, GDP, Fed comments, Chair Powell, manufacturing and expansion territory. Boom. 10-year went right up to that little level. But has not been able to break out that 4.35, 4.36 range. Can job growth, which is expected to be at 200,000 by the BLS jobs report at the end of the week, and unemployment at 3.9%, ADP jobs report at 130,000 jobs created. If it breaks above that, maybe the 10-year breaks above that range, which the Fed doesn't want, because then it becomes a lot more expensive to refund and fund new treasuries and reissuance of treasuries, fund our spending at this country. So we're going to see jobs report, lots of data coming out this week. I will say that part of that try mandate that the Fed has, maximum employment, all the Fed members on that last dot plot, the last meeting, they said they don't think employment's going to go over 4.1%. We start to see an unemployment rate get over 4 and 4.1%. You might start to see that Fed rate cut start sooner because they got to save labor. What else is going on? Jobs report. By the way, California has the highest unemployment rate in the nation at 5.3%. What's going on, California? Just moved here 8 years ago. Man, we're doing our part. We're hiring. New home sales, 662,000 units. And U.S. oil, we are the biggest producer in the world and the biggest net exporter of natural gas. Have a fantastic week. Happy April. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.